Hi, this is Kim speaking on Tuesday the 30th of May, around about midday, looking at the week ahead, taking a bit deeper analysis this week in terms of having a little bit more time to run through what the markets are really doing, looking at them from more than just a technical standpoint, looking at the fundamentals, because we can see those in the bigger picture affecting the technicals for sure. And looking from what retail and the commercial sentiment is sitting like, so a bit wider perspective, if you like, on the markets. Now, from a technical point of view, when we're looking at this weekly euro dollar, last week, I mean, the range of last week, we've almost covered the same range in one day this week. So we've covered through the Asian sessions, through this morning. We've done a similar range to what we saw over the whole of last week. It was a very bitty week, and we've seen quite a few of these weeks where there's no clear signal in terms of direction always. Now I'm looking at the euro, and the euro has probably been a better pairing of all. Now, looking at where we are at the moment with the euro from a weekly perspective, well, we saw the shooting star end up into last week. There were some sort of signals, and there's sort of some divergence going on in the daily. From a daily perspective, I do wonder if we can roll over some more. Now, what may stop that is there's a weekly pivot that sits above us at 112.06. Now, if the price continues this morning's rally back into that zone, well, that could be hit, and it'll be interesting to see what happens thereafter. Technically, well, I mean, that may be just a lower high come in, and if it starts rolling back from that, well, I'd be looking at this daily 21, daily 34, and well, the monthly pivot, I think it's a big ask, but we can project this coming month's pivot onto these charts, which is shown by this line here, this purpley, pinky line here, which possibly tear up or come into around about the same price as that 21, maybe a bit lower if the price keeps on dropping. So that's the projected pivot for this month, or this coming month, as we run into Thursday, Friday. Okay, now from a fundamental looking at the current month and how things run, well, we've seen a bit of cheer running through the markets. There's some good German data, French data was up at times. But overall, there's still some underlying weakness, particularly in terms of inflation, and that's been borne out this morning again with the German inflation coming through and disappointing somewhat. Overall, we'll see some more inflation numbers out tomorrow, but it does look relatively weak in terms of inflation, and I can understand why Draghi was being a bit down on the markets when he was doing a review yesterday. Outlook, though, well, technically, as I said, I believe it could roll further from what we're seeing here. And then we look at the sentiment, and the retail sentiment, well, that's pretty bearish. Well, it's probably not surprised. As soon as you see a high come in, all of a sudden it's been pushing up for some distance or some time. The retail sector tends to get quite bearish. Now, from the commitment of traders, looking at the larger commercial or non-commercial positions, and they're really pointing as a slightly getting a bit more bullish, actually, if nothing else, on the euro. Which so retail and the non-commercial don't agree, which is not unusual, to be fair. What's it tell us? Well, I believe where there's a possibility of further upside, of course, and you can see this just purely technically. We've put higher lows in this sort of daily picture. The weekly, as I said, to me it's weaker, and we may well close back within our bands there, which may signal even further downside in the coming weeks. So it could be quite a pivotal area on the euro here. Now we've got the Greek debt situation rear its head again, and there's a possibility they won't pay their next interest, which could leave certainly more uncertainty with the euro dollar. Okay, so let's have a look at the pound. And we're taking it from this weekly perspective. Now, there's no surprise really. The pound's in a quite a tight range, and you can see over the last 5-6 weeks we've not really done too much at all. In fact, last week we saw a bit more of a sell-off, and that was partially driven by the reduction or the gap in between the Labour and Conservative. In fact, the Conservative lead being actually reduced. Now we've got this to run through this week, and of course right through into midweek next week, the 8th. So that will remain with the pound. Technically, from where we are, yes, we've seen a bit of a bounce this morning. There are some positive factors within these markets. We've just run back into the weekly pivot there. Monthly pivot still untouched below. That's a possibility. We could just still run off in the next day or so. But realistically, from what we can see here, it's looking a bit more bullish. The new monthly pivot is just fractionally above the projected, and personally I think we'll end up being in a relatively choppy range unless there was something significant in the polls that starts driving the pound up higher again. But the factors, of course, the last week's tragic episode in Manchester has unsettled the pound, or the belief in the pound maybe a little, although that may soon come back into the original range. Now, from a fundamental point of view, inflation is flying along, but the biggest problem was the core inflation runs at 2.4, so does the average earnings. Average earnings are still below, particularly the main inflation, which is sitting at 2.7. So there's a deficit effectively in terms of income versus expenditure there, which is reflecting. And although retail sales are slightly better, the overall picture, services, manufacturing, construction was all good at the beginning of the month. We got those coming up on the 1st, 2nd of June. So this week should be quite volatile in that respect. I do wonder how much we'll see in terms of range bound. In terms of the cotton analysis, well, these non-commercials are a little bit less bearish. The retail is pretty flat. They particularly don't know where to go, and the markets, the technicals are particularly showing us it's a difficult way to get any real view on this, either long or short. Now, as I say, that we could pitch up a little bit. I think it could be. There's a lot of risk in terms of trading it, of course, because of the potential daily polls and everything else that's going around regarding the pound at the moment. So overall, I think it could be choppy. We could get some good daily trades, intraday trades out of it, but in terms of direction, it's a tight one. Okay, so looking at dollar yen, big picture here. Dollar yen. Manufacturing slightly up, GDP's better, inflation actually registered for the first time in a long time. Retail sales are starting to pick up, but the cotton remains negative, and retail traders remain flat. And you pretty much look at this weekly chart, and it's quite not the clearest one to decipher. There's lower highs still coming through. Well, we've yet to confirm a lower low. From a daily perspective, it's been quite bitty and choppy over the last week, and well, maybe we'll see more of the same at the moment. There certainly seems to be a lack of clarity. Factors that may have hit the yen in the past, high oil prices, etc. Well, oil prices are remaining quite flat, so that's not having a significant effect on the yen. Okay, so let's look at another pairing, the Aussie dollar. Oops, sorry, come down a lot too much there. Looking at its weekly picture first, it's yesterday, last week even, it's put this doji into the upper bands there, into just short of the weekly 50. Looking weakish, and you can see, from a daily perspective, it wasn't much better. Again, the weekly pivot is marginally above us, and the monthly pivot projected is around about where price is. So I don't see a great deal of movement potentially either way sitting in the Aussie dollar. Factors, of course, that would affect it was the OPEC meetings. Well, that came through in relative neutral. That there isn't still high supplies on crude. although the positive of production being maintained at the reduced numbers may come into play at some point through the summer, but at the moment, with that sort of data in the background, it's not particularly strong for the Aussie. Trade balance was okay. Actually, trade balance was slightly down in the last month, which is not the best of things. Futures on ore are down. Gold and silver are both up, so there's some positivity there, which may be holding the Aussie slightly better than some pairings that are related to crude. The COT analysis is flat, and also retail trading is more erring slightly on the longer side, but you can see why that was. Over the last week or two, we've seen, or at least 2 weeks, we've seen some sort of more positive aspects there. However, just question really is that it? But one thing's for sure, is probably going to chop along. Okay, and the Canadian dollar, obviously much more weighted on oil prices. We saw some benefits over the last couple of weeks, but already this week we're starting to give some of that back, and even late last week we started seeing some upward movements. The move on Thursday, for example, it was pretty much disappointment in terms of the OPEC data and the lack of I should say lack of, but the continued high amounts of stock oversupply. Okay, so oil's really affecting it from that perspective, and there's the risk that it could push on up higher here. Inflation is core is minus 0.2 in Canada, so it's there's little interest rate or little potential of interest rates, etc., being increased in the any near future. Unemployment's down. Manufacturing's flat. COT analysis, sentiment is also flat from both retail and the COT analysis as well. So overall flat, and it probably sums up the last 4 or 5 days here. Perhaps if we can start pushing above the current monthly's pivot there, the new pivot's just above that area at 35.52. So if it starts pushing up above there, we're already slightly above the weekly pivot where we're sitting at the moment. So there's possible potential for a turnaround here. In summary, then, looking at the euro, there's still quite a lot of risk, and I think we'll see over the next day or so maybe a bit more trend forming, potentially to the downside. If we see the price push through that weekly pivot, well then I would be looking more bullish as the week goes on. But we've got, of course, this week we've got a lot of data coming out. We've got particularly Thursday, Friday, ADPs on Thursday, non-farm payrolls on Friday, the main numbers, and of course within those numbers they'll be looking at average hourly earnings expected to come in around about 0.2. So that's the sort of numbers that we'll be looking at. We know inflation's still running pretty low in the US, but it'll be interesting to see how those non-farms come in. I'll be keeping an eye mostly on the euro this week. By looks of things at the moment, it seems to have the most potential, but we'll see how things roll out. Have a great week. Bye.